Good morning. Today is Wednesday, June 28th. So let's look at everything we have here. We're going to start over from the day shift to see what price has done so far for the week. So let me get rid of some of this stuff on my screen. Let's go to make a chart and then we'll dress it up again. Okay, this is what we have, a clean chart. There's my cursor, follow it. We're on the day. Actually, let's go to the month and see if here we are with the month. This is what we saw earlier. On Sunday, we broke the August high here. This red candle broke the August high. The yellow candle going up. Red candles closed down on my chart. Yellow candles close up. So this is a bullish candle up, bearish candle down. Right now, we're a little past the high of the August candle, which at this point, we may be looking for a little higher prices before we go down again. This is indicating higher prices at the moment. Let's see what the weekly chart is showing us so far. So as you can see, watch the date here where this purple circle is. When I put the cursor on the yellow candle, which means right now, so far, for the week, since Monday, we opened on Monday. We went lower into this green imbalance, fair value gap, which is a bullish imbalance, which means price should bounce off of it to go up. So far, we've been going up, even though we've been taking sells on the lower time frame, which is the 15, the 5, the 2 minute, which we've been trading so far Monday and Tuesday this week. We've been going down. Yesterday was a bullish day. We'll look at it. We opened really and 4:30, 5 o'clock hit. Price has been going up, but Tuesday is a Judas swing day, which means it's a false move for the week. So if on Sunday we saw prices going down, Monday price went down, Tuesday price was a fake out. I'll show you that on the day chart. That means price went up. To fake people out to think, oh, price is going up, I'll take some buys, because that's what the algorithm does. That's how the stock market makes a lot of its money from traders. They fake them out. So today, essentially what we're looking for is slightly higher prices up into an imbalance on the day. I'll show you which one I'm watching for it to come back down because price is really moving lower. So let's look at the day. Here we are on the day shift. Sorry, day shift on the day chart. So watch the cursor and the bottom is the date. So this little red candle is today's date, is today's candle so far. That's Wednesday, June 28th. The yellow candle is yesterday's. Remember, my yellow candles are bullish candles, which are up close candles. That means the candles close higher than it opened. Yesterday, June 27th. The day before, the red candle, which means price closes lower than it opened. That's Monday, June 26th. So what caused price to turn around? This imbalance to the left formed on June 12th. Fair value gap, a bullish fair value gap because it's formed by yellow up close candles, bullish candles. So it's a bullish imbalance. When price trades down into it, if it's respecting it, it should react and bounce up, which is exactly what it did yesterday. Now, if you remember in Sunday's review, I pointed out the imbalance on the day shift at around 44.50.25. Look at where the cursor is. The red triangle that says FVG for fair value gap, that's a bearish imbalance. It was made by down close candles, which means when price gets to it, it should reject off of it and go lower. So remember I talk about price range and equilibrium. Highest high, lowest low before price turned around to give us a retrace. In trading, we call this a retrace because price is really overall going down towards the equilibrium of this price range. So let's look at the equilibrium of the price range, which is this 0.59. That's where price wants to go if it's coming down. Price always wants to veer towards equilibrium within price ranges. This is the day chart. So price wants to come down to this equilibrium around 43.23.75. Price goes down, comes up, goes down, comes up, goes down, comes up, goes down, comes up, like this. It goes down, equilibrium, goes up, goes down, comes up, goes down, comes up. That's how price moves in a downward direction. And it does the opposite in the upward direction. So we look for equilibriums of price range to see, okay, price should go here next once it's at a high or a low of a price range. So right now, the small price range that the day shift is for, equilibrium, watch the white line, is around 43.30.50. And what's above equilibrium? Remember I was telling you guys about premium and discount? Above 50% is premium, below 50% is discount. And price moves from discount to premium, 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 on its way down. Does the same thing when it goes up. Right now, price is here at this red candle. Day chart, keep that in mind. And it looks like it wants to go to equilibrium, maybe even into this day imbalance to eventually come back down. That's what I am seeing in price. Keep in mind this equilibrium on the day shift, this imbalance on the day shift, and where price, day chart, excuse me, I keep saying day shift, day chart, and where price is right now. I'm going to leave that there so you can see how it looks on a lower time frame. Let's go all the way down to the 90-minute. Now let me zoom out so you can see I put these things on the day chart and we want to see where they are in relation to the 90-minute. Let's go back to the day chart. What I didn't put on here is that imbalance, the day imbalance. Let me see if I can find it. Give me 1 minute. Highs and lows. Okay, that's not it. Temporary boxes. Okay, we'll deal with those two boxes. Let's go back to the week. This red rectangle is a weekly imbalance, as you can see to the left. Open this up for you guys to be able to see it. It says fair value gap, which is made by down close candles. So it's a bearish, which means price should react to it to go down once it trades up into it. On the week, this is a bearish imbalance. Let's go back to the day. That's the bearish imbalance from the week. And this small red candle move this out. Small red imbalance that says FVG right there is on the day chart. So when price goes up into that, it should come down. If we look at price closely, yesterday, price already traded up into the weekly fair value gap. See that rectangle? That yellow candle already traded up into it. Now it came down, it reacted slightly by coming down, but it still closed within the imbalance. So that's an indication to me that it wants to go deeper into the imbalance. If it had gone into the red, the big red fair value gap, which is the weekly fair value gap, WFVG, and closed lower than the rectangle, it would show me, okay, price wants to come lower now, it's reacting severely. But because it closed inside of it, it tells me price likely wants to go up, take out these highs, and into the daily imbalance fair value gap. Let's go down to the 90-minute. Let me zoom out so we can get a perspective of where we are with what we put on this chart. From the weekly, here's the big weekly imbalance on the 90-minute. We're on the 90-minute. See, that's highlighted. And this is the day imbalance. So price yesterday, let me go back and mark out my days because I need to see my days on my chart. It's important that we know what day of the week did what and where the highs and the lows are. So as we can see, that's Tuesday, Monday, Friday, all the way back to Monday, June 11th. So Tuesday's trading was from this point to this point, midnight to midnight. And Tuesday, yesterday, price opened, came down slightly, and then went all the way up into this big red rectangle, the weekly fair value gap, bearish. It did come back down, but we can see it's going right back up into it because it traded down into this bullish 90-minute imbalance. That's what price does. It goes from imbalance to imbalance, equilibrium to equilibrium, highs to lows. That's why price really does not travel in a straight line. It comes down, it goes up. It comes down, it goes up. It comes down, it goes up. Down, up, down, up, down, up, down, up. And it's important that we know where imbalances are, equilibrium is, watch old highs and lows, because once it hits a PD array, you'll learn what a PD array is, premium discount array, which is an imbalance or an order block or a high-low or a breaker order block. It will turn around, but this is not reached that objective yet. In my opinion, price won't turn around until it gets to at least equilibrium of the day price range. We'll look at that later because it's not there yet. Okay, so here we are on the 90-minute. It's trading into a 90-minute fair value gap. Let me open this up really big and see. You can see where it says FVG. So small, but you can't dismiss it because it is an imbalance and it is important. So let's see if we could get to that to see where price is in relation to that on the 90-minute. Okay, price is already traded up into that. And it did react. So we have to watch that 90-minute candle. If it closes lower It also took out this yellow candle's high. As you can see, this candle is higher than this candle. Move my cursor. And it took out this red candle's high. So this yellow candle that traded up into the imbalance on the 90-minute took out two highs, the yellow candle at 22.30 and the red candle at 19.30. If it closes higher or inside of this fair value gap, which is the imbalance, it will show higher prices. If it closes lower than the two candles whose high it breaks, lower, then it'll show me it wants to go lower. But right now I see it wants to go a little higher and into this middle red rectangle, which is the daily imbalance or fair value gap. That's what I'm keeping my eyes on. First, this high from yesterday. See, this is Tuesday's price action, Tuesday to midnight Wednesday. This is the highest it traded. This is the lowest it's traded. So I want to see, does it want to break Tuesday's high and go higher into the rectangle on the day to come back down? Or is it going to just break Asia's high? I'll show you Asia high when we get down to the 15 minute. So let's go and get down to the 15 minute. Let me put some lines on here. Timelines. There we go. Asia, remember, starts at 1800 military time on 6 p.m. the day before. So yesterday at 6 p.m., Asia started trading to midnight. So this is the Asia range. What I always do is put a box around the Asia range from 1600 to midnight. Label it Asia range. I try to do the same thing every day because it teaches discipline Asia session. Now open this up. And I will mark Asia high. This is the highest prices gone on the Asia during the Asia session. And I will label it Asia high. I can see how price interacts with that. And this is the lowest Asia has traded since 6 o'clock yesterday. So I will mark that as Asia low. Okay, so as we can see, Asia high, Asia low. Prices in between Asia high, Asia low. Let me mark yesterday's high, highs and lows. Okay. Just give me a minute. Let me just mark this up properly. Okay, this Thursday's high. Tuesday's high. Just give me a second. Let me make sure I have what I want on here so that we can review it. Okay, there we go. Tuesday and Thursday high equilibrium. Wonderful. Okay, so this is where we are. Remember the slim rectangle from the 90-minute chart that we highlighted here that says FVG right there. Move the cursor. That's an imbalance created by down close candles. And we said once price goes into that, we have to see how it reacts because it take out two highs, and if it reacts and it comes down and closes lower, it will show lower prices. This is the 90-minute chart. 39 minutes left in that candle. On the 15-minute, you can see it traded up into it twice. Both times it came down and closed below the rectangle. So this is the candle now that shows it went up into it, turned around and came down. That's the wick. And it's headed down towards this green fair value gap created by yellow up close candles, which is a bullish imbalance. So price is bouncing between two opposing imbalances. It's going up into the red, coming down into the green, up into the red, down into the green. This is a 15-minute candle, 8 minutes left in this candle. We have to see how it closes to read the hint that price is giving us as to which way it wants to go. But again, what's important, what is vitally important, right now it's just chop, 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 chop. When price is between a high and a low, Asia high, Asia low, it's not telling me anything. I'll read individual candles and say, oh, the next candle looks like it should go up. The next candle looks like it should go down. But in the real world, what's important to us as far as my strategy and putting in a trade or no is how it reacts to highs and lows. So this is the highest price went on the Asia session between 6 p.m. yesterday to midnight. This is the lowest price that's gone during the Asia session between 6 p.m. and midnight. Yesterday, which is Tuesday, let me zoom out so you can see Tuesday's price action from start to finish. Tuesday is here. Look at the cursor at the bottom. Wednesday is here. Midnight Tuesday to midnight Wednesday. All of this is Tuesday's price action. This is what Tuesday did. Excuse me. So Tuesday opened, went up slightly into an order block, checked it off of that order block and came down, did not take out Monday's low. This is Monday's price action. And as you can see here, it says Monday's low, this bottom red line. So Tuesday did not break Monday's low because it wanted to go up and manipulate price. It went up and it took out short-term highs. Short-term highs. Let's measure Monday's price range. Yes, it did. It took out equilibrium of Monday's price range. That's what we were watching yesterday, which is this zero point 0.5 line. took it out. We took that trade that made us $1,000 when it rejected off of it initially, which is here around 3 in the morning, down to where it hit our TP, which was this bullish order block. It break the bullish order block low, turn around, break the old high that it created when it took out equilibrium, and continue going to take out Monday's high. As you can see, that's the highest we traded on Monday. Tuesday's price went and took out Monday's high, but it didn't turn around. It continued going higher to get into the weekly. Here's the big red imbalance that we identified on the week. Red means bearish. Price would go into it, should trade into it, and be rejected down, which it did initially. And now it's going back up into, this is unusual. That's saying price doesn't really want to go down now, because usually when price hits these imbalances, especially on a 15-minute chart, if it hits a weekly imbalance, it reacts severely. So price should have really been continuing on a down. It means it's not done yet. It wants to hit another, a higher imbalance or take out equilibrium or high before it continues on its downtrend. Because if you look at the day, price is on a downward trend. This is so messy, but remember what we said earlier and what we saw, a downward trend for price on the day and the 90. So we can't forget that this is temporary, because this is how price moves. This is how we trade in between the highs and the lows, or to the highs and the lows. Okay? So this is the 15-minute price action right now. We have 3 minutes left in this 15-minute candle where the cursor is. This is the current 15-minute candle right here. And look over here, 2 minutes, 55 seconds we have left in this candle. So let's go to the 5-minute and see how price is behaving on the 5-minute. Let me go back to the 15 right quick to see if I need to highlight any major order blocks or fair value gaps. And remember, fair value gaps are imbalances. We call them fair value gaps. Order blocks are candles that indicate a change in direction. They're more complicated. I really just understood that myself. Again, we'll get into that, but I'll start with the beginner videos this weekend. You'll need a notepad, pen, because you're going to more or less study what a candlestick is, how they move, how they are formed, what it means, different patterns that they make. That's really the beginning of your trading journey. It's important you start at the beginning to understand when you see these things, the why. And that's important. Once you know the why, once you know what it should do, once a candle prints and it does what it does, it makes reading the tape, we call this reading the price tape or reading live price action, because the algorithm, price is an algo, you'll probably learn supply and demand, which I did. Learn it because it's important, but that will totally be debunked once you get deeper into it. But learn it. Learn as much as you can. And then you will see when you learn more, that's not right, but learn it. So I will give you the pathway to learn it. And then we'll get into the nitty gritty once the knowledge increases. And like anything else, you'll put aside the nonsense and keep the facts. But we're sitting here watching this 15-minute candle. It has 36 seconds left. Let me open this up so we can see how it's reacting, because this candle opened high, went up into the down or bearish imbalance 90-minute, reacted by coming rejected and coming down into a bullish imbalance, which means price usually reacts to this by bouncing off of it and going higher. Okay, so it closed inside of that fair value gap. Let me see the candle next to it. The low is, let's look up here. O is open. That's where the candle opened at 44.11.25. High is where the highest point it traded. Low is the lowest point it traded. And close is where it actually closed. So let's look at this candle right here. You can see this yellow skinny wick candle. You can see the low on that is 44.11.25. Let's go to the candle that just closed to see if it closed lower or higher. The low on that is 44.11.25. So they closed at the same, sorry, their lows at the same level. Same level. So no lows have been broken. Let's see the high. 44.13.50. 44.30. So both these candles, high and low, are the same. The same. So let's see what this candle, that doesn't tell me anything. The only thing it tells me really is both of them closed inside this bullish imbalance after trading up inside of this bearish imbalance. So price is like up, down, up, down. It's not this candle open, spike down slightly. So we'll see what this candle does, because right now this candle broke the lows. What I want to see is, will it close lower, indicating it's coming towards Asia low, or will it close higher, indicating it wants to go towards Asia high? We're watching as we usually do. Let's watch on the 5-minute. And I like to watch on the 5-minute a lot of times when it's getting close to the 3 a.m. hour, because that tells me a lot. My setup time for my trades usually form between 3 and 4, sometimes at 5, around before 5. I don't like to trade after 5 because price usually just trades in a straight line. Usually moves happen between 3 and 5 a.m. in the London session, and it tells me things. Otherwise, like this is telling me nothing, because it has not violated Asia high, Asia low to tell me, okay, it violated a high, so it wants to go higher, or it violated a high, so it wants to come down. This tells me nothing. I'm just watching to see once it hits a high or a low. Sometimes other PDOAs will tell me things as well, but I prefer the violation of a high or a low, because it's just a clearer message sent as to what price action wants to do. So here we are on the 5-minute. Here's the fair value gap, or the imbalance, bearish imbalance right here. Bearish imbalance that it's we saw on the 15-minute, traded down into it on the 5, reacted by bouncing off of it so far. It's a minute and 19 seconds left in this 5-minute candle. But this candle took out both the low of the previous candle and the high. But it came down and took out the low first, went up, took out the high. So if it wants to go higher, it should close above the red candle. If it wants to go lower, it should close below. Indications that I look at. Nothing is guaranteed with these price action. It's an algorithm. I'm just trying to figure out what the algorithm is programmed to do, which is what you will learn to do. That's what pushes price, the algorithm. You're trying to figure out the language of the price algo. And all this action is what is referred to as the market. or price action, these candles. So let's watch and see. Okay, I was just comparing my ES chart to my Treasury bond, 30-year Treasury bond charts. Usually they trade opposite each other. So I use this as a form of confluence. If my ZB, which is my 30-year Treasury bond chart, is going up, I look for my ES chart to go down and vice versa. So right now it looks like my ZB chart, it's this yellow candle, is going up, but it had a reaction and it's pulling back a bit, but it's on an upward trajectory for the last hour. So I'm looking for my ES chart to go down slightly for the next half hour or so. For the next half hour or so, yes, about 20 minutes until 3 o'clock. I expect some downward motion only because my Treasury bond chart is going up. So that's what I was watching, marking highs. See the highs? These are highs are relatively equal. I want to see how my Treasury bond chart, see the CB, which is the futures, what I want to say tag for 30-year Treasury bond. I want to see if it violates this high, which is this blue line, these highs, and if it closes above it into this bearish imbalance, fair value gap made by red down close candles, so it's bearish. Price should hit that and react to come down. I want to see how it reacts, breaking these highs into this bearish candle. It should, sorry, imbalance. It should retrace. I want to see if it tests yesterday's lows that it took out, previous day's lows. That's actually Monday low. I want to see how it reacts to that as well. So I want to see three things: how it reacts when it breaks these highs, which is the blue line, into this imbalance, which is bearish, and the previous low, if it's going to reject off of that and stay below it, or break through and continue to trade beyond it. That'll give me some indication of what to expect from my S&P 500 futures chart, ES, which would be the opposite. So price is moving down right now on the ES. And I highlighted some short-term highs and lows to see how price reacts to those as well. Because as you can see, these lows are relatively the same, at the same level. Price always wants to go towards levels where the candles are almost the same to break it. Here we go again, equilibrium balance. So if all of them are the same, it wants to come down, break it, take up that liquidity, and then go up, break it. There we go. Another two sets of highs. That's at the same level. And I want to see how it reacts. So this is what let's put a arrow for direction to say this is what it looks like price wants to do. It's not what we think. It's not what we feel because we're learning the algo. We want to say this is what it looks like price wants to do. So price is moving down. It looks like it wants to take out these relative equal lows below the blue line. Could trade as low as this box, which is an order block, and then go up. I think it would want to go up. I'm seeing the PD raise and take out these equal highs before it comes down to midnight open. Let's see what happens. Let's watch price. I'll watch on the 2 p.m. It's 2:45, heading towards 3 o'clock. I like to go down to the 2 minute to see if I see any indication of where price wants to go, and it's giving me any clues for a potential setup between 3 and 4. So let's see what it does on the two. I'll be switching between the 2 and the 5. 2 minute, 5 minute. Another another thing we want to look for when we're watching price and be mindful of is the news. You notice I have here news at 0930 because that's when I told you guys price is an algorithm. So you have what we will learn to do is read that algo because it gives us hints as to where price wants to go. The money follows the algorithm. The money does not dictate where the algorithm goes. So when you're learning your candlesticks, they'll talk about supply and demand to say, oh, supply pushes the price down, demand pushes the price up, etc. No, money follows where price goes. Price money does not push price in one direction or the other. But learn it because that's the beginning of your journey. And what happens when news? It says news at 9:30. I think we also have news. I think we have two sets of news today. No, just today is 9:30. Um, the central banks and the trade commission goes in and resets the algo. That's like you do with everything else. That's like you restarting your computer or restarting your car because it can't continue to run without a reset. And you have to give what happens is how I trade is I give the algorithm at least half hour to an hour after the news drops for me to figure out what it's doing after the reset. So if we could see all of this and say, okay, the candle closed here and it did this to a high or a low, so price is going in this direction, and then after the news, it does a total 180 because it's been reset. And then we needed to settle down and drop hints after the reset to tell us what's going on. So news is very important. Got to put that on your chart. Far from it now in your journey, but I gotta say that. Remember news, 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 because it's the manual reset of the algorithm. You have to get back in sync with it after news because it's been reset. And it's done on purpose because it tricks the retail traders into going in one direction and it'll fake them out after the news and just hit a bunch of stop losses. Money, ching, 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 ching. That reminds me of slot machines or Pac Man. Money just being gobbled up, gobbled up, gobbled up. Because if you don't pay attention to the news and price is telling you it's going higher and you went in and you put in your trade for higher prices, news drops. You have no idea news is coming up or news happened and the price just turns around on you and you're like, what just happened? Algo has been reset and hundreds of thousands of people stop losses just been hit because they're not paying attention to the news. Now where I get my news from is, let me see if it's going to come up. No, it's not showing it. Forexfactory.com. So if you're taking notes or when you start, that's where we'll be getting our news information from forexfactory.com. So right now I see absolutely zero setup. This is how price, if you notice, price moved from this 90-minute imbalance. Remember we highlighted this on the 90-minute chart. Let's go back to it. This small imbalance in here that we had highlighted on the 90-minute, right there. Watch the cursor. Right there. That is this red box on the 2-minute. Right there. So price traded up into that bearish fair value gap imbalance created by red down close candles, which means price should trade up into it and push down. Exactly what it did. And it's come down into a 2-minute bullish order block. Don't pay any attention to that. I have to use the right terminology, but a bullish order block is made by a red candle. You learn that in your advanced stage. and price usually reacts by bouncing off of that. So I'm not surprised that it's not going any lower at this time because it's reacting as it should to a bullish order block. That's why I highlighted it. And you'll learn that at certain stages with certain imbalances and certain areas, price should give you a reaction. At highs that are basically the same, it's called relative equalize. At lows that are basically the same level, called relative equal lows. At order blocks, last down close candles for a price change. Midnight open, which is the level at which price opened on the midnight hour. Old highs, Asia high, yesterday's high, Tuesday, Thursday's high, and old lows, Asia low. Mm, next low is really low. Equilibrium of a range. I went in and got equilibrium of yesterday's range. Sorry, equilibrium of the current range. And then I went in and I got equilibrium of yesterday's range because price seeks equilibrium. We'll see which one it wants today. That's important. Those levels, you have to identify key levels because the algorithm reacts to them. And if you look at this, to the T, this candle side is up here. Look up here. O for open, H for high, L for low, C for close. Where the candle opens, how high it traded, how low it traded, where it closed. If you look at this red candle, the high on that is 44.1350. Look at this yellow candle. The high on that is 44.1350. And no supply and demand can have them that precise. That's an algorithm. You could do